But first, we're going to talk about making some money in very unique names. No one's got a greater breadth of knowledge than Market Gauge Managing Director Michelle Snyder, and she's here with her buy, sell, and hold list right after this. All right, so the tenor of the market's changing a little bit, right? We're starting to pick up steam late into the session, and there are a lot of major indices, as we pointed out already in the show, at major resistance points. Some of them are breaking out. Maybe that sparks some panic buying. I'm going to bring in our Market Gauge Managing Director, Michelle Snyder. Michelle, I know you're watching on the Russell, the IWM. You say 190. 190 is a key number for you. What happens if we can get through there and close above there?
Well, 190 is the December high. It's also a high that hasn't been cleared, by the way, in the S&P 500 yet. So that December high really stands looming large as resistance. So if we can get through that, obviously, I think we'll see some renewed buying. Looking at the SPY, I would think that would take the SPY from current levels up closer to about 420, which is really our target for this year. So that IWM is key because we really need the small caps to participate in this rally.
Well, if you hit your target this early in the year, I mean, what do? Do you, you got to go back to the drawing board, right?
Well, yes, if you hit the target, first of all, a target is just a target.
Sure.
So it's obviously is based on a real technical point in the monthly chart. The 23-month moving average sits there. So that's about a 2-year moving average, which means if we get through that, then obviously you have to reevaluate. It's always going to be how much risk you're going to have at that point. Mm-hmm. But yeah, I mean, our targets are there because of the monthly moving average. We try to branch out a little bit in terms of time frame from the daily to the weekly to the monthly. And that's about the broadest we're going at this point.
I got you. So in the meantime, then, and it sounds like you're being cautiously optimistic, and maybe is that the industrials? You like the industrials? I know yesterday you picked up some Freeport, GE, Boeing. Boeing has looked really compelling, but golly, have they ever had two good news stories back to back? Is this all about value right now?
Well, it's partly the big comeback of that stock. We haven't seen any crashes lately, and because we're having travel coming back, Boeing is getting advantage of that. I know it's down a little bit today, but it's consolidating near a very high level. So if the market holds, and even before the market when it was dropping, Boeing was outperforming. We think it can continue to outperform as we get into the year. 5 years ago, I had 4 stocks that I said you should never sell. And Boeing was one of them. I mean, because of the global dominance, they just have one competitor around the world, and air travel picking up like crazy. It just seems like a no-brainer if they can get back on track, to your point. I know you watch commodities very closely. What do you make of the move in crude? Crude oil is going up. Crude oil stocks, maybe spinning their wheels a little bit, which is the inverse of what happened last year. Well, what's so interesting about the crude oil is that it's really doing so much better than, say, natural gas. And last year it was all about the natural gas, which has completely fallen out of bed. So what it's telling you is that the crude oil demand is there and continuing to possibly rise because of China, and also because of our strategic reserves being really super low right now. There's supply concerns, but it hasn't really started to fly yet. So it's at a very critical point. If we can hold up here around $80 to $85 a barrel, there's no reason why one spark plug could trigger and send that back up to 100 or even 120. And I still think it's an X factor. So I wouldn't say I'm overly bullish, but we are long some oil here with a very tight stop.
So the theme here feels like you're playing it close to the vest, so to speak. I got a minute to go. What are your big concerns right now?
Well, inflation. So we talked about oil as an X factor, but there are certain things that are given. I don't know if you guys have noticed the food stocks today and the soft commodity stocks. Sugar flying, coffee flying, wheat flying, soybeans starting to pick up a little bit. All lumber went limit up this morning. So all of this now is pointing to the fact that these commodities that have been under pressure are coming alive. And of course, we're going to see that sometimes alongside of equities, but it always means at what point do the food commodities in particular that can really wreak havoc keep going up, which spurs inflation, which of course then has a domino effect on everything.
It's interesting, and we've seen the consumer staple stocks, a lot of those stocks have come down. There was an assumption not long ago that they actually would have, be able to keep that pricing power as inflation went down, the raw materials. But maybe that's not the case. Michelle, always enjoy our conversations. Thank you very much.
Thank you.
All right, see you soon.